Is Kamala Harris a communist? Is Donald Trump a Hitler? That is the questions that we are going to be going through today, guys. This is Christian D. Evans and Andrew Morale with The Journey podcast. We are so excited because we're going to be unpacking the economic downfall or the economic differences between Donald Trump's economic policies and Kamala Harris. And I'll be honest with you, it was actually fun to research this. It was a lot of fun to unpack this. And yes, we come in with a lens of our own political views, but both of us, we try to put that to the side and say, okay, what is the best in the formation of the perspective like business? What's actually going to regenerate the U.S. economy to the levels that we have seen before? And so that's one of the reasons why I wanted to talk about this because, man, holy shit, I hope things work out the way we think it is because otherwise it's devastating. And there's going to be some really interesting things you want to be tracking. So I got Andrew Morale. He's going to lay the foundation for us, and then we're going to be unpacking. But how are you doing, Andrew?
I'm doing well, man. And this is it's a hell of an intro there. That's some clickbait of those two. But no, I think it's an issue that is forefront on everyone's mind. And this has been, as always, every 4 years, I feel like it's a crazy environment that we have in this country with the political sphere. And this has been no different, right? So we're going to get into some of the economic policies, the impacts that they will have. What are these two candidates proposing, and which direction are they proposing to take the U.S. economy and the country as a whole? And I think unfortunately, I think today we get so tied up, TikTok, the 30-second, like the feelings behind presidential candidates. And it's either I hate this person, so I'm voting for this person, or this person's stupid, so I'm voting for this person. And we miss, and we kind of get, last week we talked about due diligence teams getting lazy, and that's kind of what led to some of the venture bubble in 2018, 19, and 20. And honestly, I think the American voters have gotten lazy as a whole, where it's, I like this person because I like them, and I don't like that person because I don't like them. And you go, well, why? And well, I'm not really sure, right? And so I think it's become a lost art, especially, for our generation. We're younger, right? And so, but from us and down, the voters, it's more on a feeling sort of base. Whereas 50, 60 years ago, it was very much show me your policies. What are you planning to do? I'm voting based on policy, not necessarily on feeling. And so I want to bring us back to that today.
Yeah, and honestly, that's one of the reasons I love what you're saying because we do get like really heightened, and obviously these two individuals right now that are running, whether it was Biden, whether it was Kamala, no matter what, we are in a very divisive kind of situation, and we like to have these, and we don't actually look at and unpack this stuff at a deeper level. And so I'm really excited about diving into it. So one of the first things I want to ask is, Andrew, if you would, we were doing a lot of research on this. Lay out the foundation. Let's just start with Kamala's policies right now, and then we'll kind of gravitate toward Donald Trump's.
Definitely. So Kamala she's been vice president for the last 4 years. She's been the border czar, and she has been somewhat tapped to take the Democratic position. She didn't go through primaries. It was kind of a switcheroo, in my opinion, where we kind of skirted the democratic process of the Democratic Party being able to vote for their candidate. Instead, it was Biden, 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 and then after that kind of that hurdle was passed, it was the switcheroo, right? The old bait and switch. But that's more politically charged, right? What is she actually saying when it comes down to what is she running on? And I think one of the clickbait TikTok style things is Trump comes out and says, one of my policies is no tax on tips. And we all see, 2-3 weeks later, Kamala's like, no tax on tips, right? And so it's like, okay, well, obviously you didn't come up with that. You voted to increase tax on tips, hire, I think it was 65 or 85,000 IRS agents to audit not gig workers, but bartenders and waiters. So it's like, okay, I'm hearing what you're saying, but what's the core of this? And so Kamala's really running on four main tenets, as is Trump. If we're going to break it all down to four main ideas for each one. Kamala is her main points are to lower medical costs, to support families, decrease food pricing, and increase housing, right? And I think a lot of that truly does resonate with the American voter. I think the last one, housing, her policy is to say, let's increase construction. My wife is in raw land development and brokerage, so she's selling 50 acres to developers. And the problem that I've seen is not in home builders wanting to build new homes. A lot of this, the roadblock comes at a county level when we're trying to get zoning, we're trying to do all of these things, and the county says, I want, half or full acre lots, I want four-side brick, and I want minimum square feet of 3,000 square feet or something like that. Frankly, that's not the type of product that is needed in the market right now. My generation, the first-time home buyers, a lot of people don't have kids. It's the dual income, no kids. Like, we're cool with townhomes. We're cool with smaller lots. Like, we just want a home, right? And yet, a builder could say, well, great, I've got 50 acres. I could build 120 homes of this smaller size. They take that to zoning with the county government. And they say, well, hey, that's, we don't want, impoverished people coming into our county. And we want these big, nice kind of McMansions if you were to go back 20 years. But Kamala's policy is around, I want to increase new housing production. And her idea behind this is to offer builders a tax incentive to sell to first-time home buyers. On the surface, I think that's terrific. In implementation, developers are already trying to sell to first-time home buyers. The county's saying, we don't want a product that's at $350,000 or $400,000. We want gated communities. We want you to pave a new road. We want big lots. And so the developer's like, well, instead of building 120 homes, now I can only build, for my numbers to work, they have to be $2 million homes. And so I think there's a divide in, okay, if we just offer tax incentives, $6,000 per home as a tax incentive to home builders to sell, hey, if you sell your house to a first-time home buyer, you get a little break. I think they're already trying to do that because that's where the huge demand is. Everybody knows that there's millions of people in this country looking to buy homes, regardless of interest rates, right? The problem is that you don't have, now the supply is an issue, right? There's the amount of supply in, now not all markets, like I know Florida and some other places have begun to have a gully or a dip in purchasing of new homes. And so there is oversupply in some markets. I live in Atlanta. We are drastically undersupplied from new product coming on the market. What does that mean? It means that like every year there are way less new homes brought to market than the demand for them. And so Kamala's like, okay, well, great, bring new homes onto the market, and here's a tax break to sell them to first-time home buyers. Based on experience, that's not where the breakdown is. The breakdown is at a county level, and this I think there needs to be education of these county commissioners and boards that say, look, this is what the market needs. And I know that you're afraid that small lots mean crime, but that is not what the data presents, right? These are high income producing families. They're not clogging up your schools. A lot of us work from home, so it's not a huge traffic impact. And so those projects that are slated for 120 homes of a smaller lot size, higher number are getting pushed, and the only stuff that's getting approved is an 80 or a 70 home project with much larger housing. So Kamala's, I think the core of that resonates with voters, especially the younger generation, because it's like, great, my dream, let's get into a home. I don't know if it really solves the problem, right? Because it's not that home builders are saying, man, forget that younger generation. I'm not making a product for them. That's not how it's happening. It's supply and demand, right? If you've got 1 million people lined up to buy a $400,000 product, you're going, great, let's build 150 of them. but the county saying, whoa, 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 we don't want growth here. We don't want people to clog the schools up and the traffic. So I think the breakdown really happens at a county level. And I didn't realize that prior to really just being on this journey with my wife as she's trying to get projects approved and they get shot down or slashed at the county level. But that's one of Kamala's kind of core principles that she's running on is affordable housing or new homes for first time home buyers. The other item that she's proposing
I
is
want to I
food
want to
price.
pause on this for a second because I
Yeah.
want to unpack this a little bit and I just share a few thoughts because I know during Trump administration, definitely the last few years, it was interesting to see the market where inflation we saw like the house pricing was just crazy, but you were able to come in at a pretty good interest rate. And so the interest rates were really low, and so it was very sexy, and there was a lot of demand for it. But what's so interesting is you ask yourself, am I buying at the highest market? Am I actually buying this at a, overvalued kind of price? So yes, I'm coming in at a good interest rate. Yes, I'm getting a good monthly payment plan, whatever it is, 30-year fixed. But the thing is this asset actually worth quarter of a million, half a million, or is it actually worth 170? Right? Does that make sense? And I think
Hmm.
that's one of the things that we're seeing right now. Now that individuals, the interest rates have gone up, inflation is still going there. The prices are like there's this discrepancy going on in the market. And I know one of the big incentives for Kamala, she mentioned that first time home buyers to be able to, incentivize, she wants to give about $25,000. And I don't know if it's a credit or if it's a debt of some sort, but basically just giving that to individuals for first time home buyers to incentivize that behavior. Now, I'm curious how that would affect positively or negatively the housing market.
It's a good point. I think ask yourself this: have prices come down in the housing market over the last 3 years?
Well,
And the
like you
answer
said,
is answer is no, right? You've got interest rates that have doubled, maybe quadrupled in some cases during the timing of the market. Everyone was kind of going, oh, okay, well, I'm going to wait for housing to crash. And then I'm going to come in and I'm going to buy up two or three properties, just like we saw. That's not been the case, right? And why is that? It goes back to our supply. 2008, there was tons and tons of supply, right? You've got people that are gig workers owning two or three or four properties because money's so cheap, they're not verifying income. That was a totally different market environment than we have today. Today we have people lined up ready to buy homes, even at a 7 or 8% interest rate. There's not supply. And so the homes that are the new homes that are coming on the market are out of our price range. And the resale of homes has not it's not dipped. It wasn't a $500,000 home that you can now get into for 300 grand. Like it's basically gone flat or smallly up, marginally increased over the last few years. But there has not been this massive dip in home prices, which I think a lot of people were expecting. Me being one of them, going, okay, well, great. I'm not going to buy in 2021 like this crazy spike increase, and you're having to pay over asking and all of that. I've got a close friend of mine. He's a first time home buyer. He's using an FHA loan and he's gotten beat out on like 9 different offers. Why is that? If you're selling a home and you know that you're about round numbers, right? Your home is valued at $500,000, but you're getting offers at 550, 560. You're in a nice neighborhood. You're like, great, I'm going to take the highest price for my property. Well, let's say, my friend Thomas, he comes in, he wants to buy that same home with an FHA loan. He can offer, let's say he's qualified up to 650K, right? He can come in and offer, oh, okay, well, I know they're getting offers over asking. I'm going to come in and put an offer for 550 down. You're the home buyer. You have 5 offers in front of you. They're all over asking price. But Thomas's offer, you see, is not a cash offer. It's not a traditional mortgage 20% down. If it's an FHA loan. One of the rules of an FHA loan is that it cannot, the Freddie and Fannie, they will not allow that loan to go through if it's over the appraised value of the home.
Mm-hmm. Wow.
So now, as the seller, you go, well, I have 5 offers over asking, but I really only have 4 because this guy's an FHA loan, and I know that's not going to go through. So that's the market that's going on. So he's no callback, no counter, no nothing, and it's like, well, hey, we like that home, we offered over 50 asking, but like as the seller, you know that that's not actually a real offer because it's not going to close because you know that it's over the appraised value. The other thing to keep in mind is if you take a step back, I love looking at public markets, stocks, and everything, right? If we do the same, if you can imagine the same like bar graph or line graph of housing prices, and you take a step back 20, 30, 40 years, we're really, if you have, the price is going like this, right? And you've got your mean of the slope of that graph, right? What actually happened in 2019 to 22 was that we came from below the mean back up to the mean. Now that was a massive increase in value, and everybody's going, "Oh my gosh, stuff's appreciating like crazy." But if you look back over, okay, housing appreciates, let's call it round number, 6% a year for the last 50 years. Where are we on that? Because of the 2008 collapse in prices and the slow rebuilding, really what we saw is a return to the mean for housing, right? Now, the marginal slope of that increase was massive, and that scared everybody. But why hasn't housing just reversed and come back down? Because now we're really back at kind of a mean price increase over the life of the thing. The other thing to keep in mind is that when you look at housing, a very interesting thing to do is say, what's the average home price and the cost relative to the average annual income of an American? So how many years of an average annual income does it take to buy this home, right? Is it 2.5 years? Is it 6 years? What have you? The delta between that has never been high. So the home price has increased dramatically, and average earnings has increased only marginally. So what you're having is the cost of a home is now drastically higher than it was 30, 40 years ago when our parents were buying their first homes and things like that. Parents buying their first home for 175 grand, and they're making 40 or 50 grand a year. Okay, so now we're making maybe 60 or 70 grand a year on an average, but the home price is at 500,000. So that's the big difference, is the average price of the home relative to the average income. You take that over, how many years does the average income cost to pay for the home? It's astronomically out of whack, right? And so the core issue is earnings, right? Home prices have kind of been on a steady incline. We're now back at the mean. It's income that is really the lagging indicator, or the lagging metric behind a balanced kind of home price and economy. So I think and I think as we go through a lot of these, they are not empty promises, but they're clickbait sort of. I know you don't like inflation. We're going to lower inflation, which brings me to the second point, which is food pricing. Kamala's second policy that she's really running on is bringing down the cost of food. And so her policy is to say, well, hey, there's been price gouging within grocers and food producers. This excuse of inflation has allowed me to say, well, hey, I'm going to sell my peanut butter for $4 a jar instead of $3 a jar, and I'm just going to leave it there. And there's some data that supports that. However, it's not across the board kind of thing. I'm much more versed on housing and that economy or market than food pricing. But another one of her main items that she's running on is trying to decrease inflation, frankly, by pouring a little bit of water on a burning fire. If we look back in history, like with Volcker in, I think it was the late 70s, when inflation was out of hand, the last time inflation was out of hand, the only thing that fixed it was interest rates going absolutely through the roof, right? Volcker said, a famous kind of a backroom conversation when they said, how high are interest rates going to go? And he basically said, I have no idea. Like, I'm gonna take off the brakes, and we're gonna see where this thing balances out at. That's what finally killed inflation. And you've seen inflation kind of getting stopped out a little bit. That is the smothering of the fire. Pouring a little bit of water on a roaring fire by saying, hey, don't price gouge people on their peanut butter. It is not a fix in the long term. It feels nice. Everybody, I mean, I go to Kroger and I get 2 or 3 bags of groceries. It's 60, $70. And I'm like, this is ridiculous, right? Everyone feels that. And so I think a lot of Kamala's points that she's running on are just that, things that people feel, and how can we kind of bring voters on our side to say we're going to fix that, right? But the truth of the matter is she's been in office for the last 4 years. She's been a part of the current administration. Hey, we're going to not have tax on tips. Okay, well, 3 years ago you voted to maintain tax on tips and hire IRS agents to audit them. So I see a little bit of a Jekyll and Hyde sort of thing where she's been a part of. A lot of voters blame Biden more so than Kamala for the inflationary environment, right? It is what it is, right? Her policy or her stance is to say, I'm not that guy. I'm someone new, right? Though she was a part of this administration for the last 4 years and really hasn't done much to change that or has been on the side of that. Medical costs is another thing that she's running on, which if you recall, it's like October of 2020, Trump was in Florida and gave a big speech about lowering medical costs for U.S. customers. People did not like that, and Big Pharma basically came after him immediately following that address. But now this is Kamala's kind of platform that, hey, we're going to fight Big Pharma and we're going to lower medical costs. And yet we saw everything that happened with COVID and mandatory vaccines and everything like that, and Big Pharma making billions and billions of dollars. So part of me is like, yeah, these are nice, but they don't match with who you are, right? If I'm a really corrupt person and I've stolen your money and I've cheated you and I've lied to you, and now there's an opportunity for me to run for the HOA board of our neighborhood, and you're my neighbor, and you know that, I'm encroaching on your land, I'm stealing your Amazon packages, and I'm kicking over your garbage can. I'm just a rude neighbor. But now I'm kind of profiling myself as this neighborhood Samaritan, and I'm such a great person. You as the neighbor would go, well, that's not what I've lived next to you for the last 4 years. That's not who you are. And so this is my biased opinion, but that's kind of how I feel when I hear these stump speeches of, let's lower housing and food prices and medical costs. It's like, that's not the neighbor that I know you to be. And so will that resonate with voters? We will see. I think it's, and cards on the table. I'm a card carrying Republican, right? Voted for Trump 2 times. I'm looking forward to doing it again. When you ask Kamala supporters, why are you supporting Kamala Harris? Is it Kamala or Trump? They go, oh, it's Kamala for sure. And you go, why? And it's like, well, she's a woman, right? Or, there's all these, but it lacks substance, right? This is the same party that doesn't really define a woman. And yet now we're going to vote one into office because she is a woman. It's like, okay. So I see a lot of this as a neighbor that I know to be a horrible neighbor that I don't like living next to, running for the HOA board as this greatest neighbor in the neighborhood, and they're going to fix every problem that we have. It's just, in my opinion, it's not indicative of past performance, right? The same way you could say a fund manager, if we bring this back to finance, a fund manager that's been losing money, has been, poor manager of risk. They're in a hedge fund. They're trading VIX calls all day long. Like, that's a horrible strategy. And they go, yeah, but and then they present themselves as this very risk mitigating, tolerant person that is all about preservation of capital. That's not the experience that I've had with you. So I'm not going to give you more money. That's how I feel with this current administration. Is I've seen what's happened to this nation in the last 3.5 years. It has been horrible on every metric. And now we're just supposed to think that someone that's been a part of the administration, granted in a vice presidential role, but we all admit that Biden has somewhat been asleep at the wheel. That's a nice way to put it. So, you're between the two candidates, Kamala and Biden, who's the most cognitively aware that's been a part of the administration for the last 4 years? You're not going to convince me that it's been Biden, right? And so now the more cognitively aware person that's been a part of the administration for the last 3.5 years is all of a sudden going to be fixing our nation. And we saw what happened at the border. She didn't go to the border, right, for months, and yet it's under control, right? So I don't understand why people are falling for this crappy neighbor that never mows their lawn and steals my Amazon packages, saying they're going to bring stabilization back to the neighborhood. I don't see it.
You bring up you bring up some really solid points, and I just want to kind of reiterate a few things that you mentioned here. One, what is so interesting, just like we were talking about in regards to the housing specifically, when you have this $25,000 basically check for first time home buyers, all you're doing is you're inflating the prices even more. Because now all of a sudden, this money that came out of thin air, now all of a sudden it's chasing assets, and all those assets will just increase. And so it almost does the exact opposite of what you're trying to do, because now all of a sudden, just like
Yeah.
you said with that example, now everything is outside of their price range because there's a lot of money chasing very few goods, and the price just keeps going. And then also coming back on your regulation standpoint, there's numerous examples, specifically in California, other liberal states, that it takes, billions upon billions of dollars. The expense of building something is extremely high. And then because of the regulation, the permits, the licenses, and then it takes forever to actually get something done. Elon Musk talks about this all the time. He moved all of his companies to Texas because why? If he wanted to build a gigafactory that's like several miles long and stuff like that, it would have taken him years, almost 10 to 15 years in California. And so he went to Texas and he did that in like 18 to 24 months. It was unbelievable because one of the things is Texas understands, hey, look, that's going to bring in jobs. That's going to bring in a lot of revenue for the state. They understand the economics of it. And so they're fine with saying, hey, look, we'll expedite these permits, we'll expedite these licenses. To take it home even further, closer, I work with a nonprofit organization and we are doing some building construction stuff like that. And believe it or not, because it's in the city in Ohio,
Mhm.
this where they're founded, they're pretty business friendly. But in this
Yeah.
specific county, it's really tough to get a permit and the license and so forth, and they're a pain. And so we'll be very transparent. There were certain things that we did construction wise that we did not get a permit for because we just knew it was going to take forever. And it's like we can get this done faster before we even get the permit actually approved. And that's just the reality of the situation. And again, it all it does is stagnate the innovation in the industry to move
Yeah.
forward at high capacity. Now, I'm not saying deregulate, certain safety protocols, safety features, things like that. Like that's everybody loves to talk about that. That's not what I'm talking about. This is just talking about saying, look, that level of safety and protocol and all that, it's still at that expectation. It's just being able to say, look, you're approved to produce, create, and develop that permit without having to go through all this red tape and whatever. And micromanaging. One of the things about regulation people don't understand is a lot of times there's this expertise that knows how to build and develop a project, let's say plumbing, and then there's a government agency that doesn't know anything about plumbing, but there are certain requirements that have to be followed, and they have no idea how plumbing has to work, right? And so that's the dichotomy of the situation that we're constantly facing and so forth. And of course, we could talk a little bit on the political points, but I just want to bring that up specifically. Now, a few things in regards to the pricing match, and I'm going to give you a few examples. One, if you actually look, so these are actually public trade companies, so you can see these margins: Kroger, Walmart, Costco. I want to just take those three because people are familiar with those. Okay, Walmart and Costco specifically. If you take the last 3 years, okay, so this is the presupposition that people are thinking. They're
Hmm.
basically thinking, look, when inflation goes down, we should see prices go down as well. It, thinking that the cost of goods have stayed the same and all that money is just being pocketed by Kroger, Walmart, Costco, all these big business people, and that's horrible. But if you actually look at the EBITDA margins from 19, 20, 21, 22, 23, and I think Q1 of 24 basically, you notice their EBITDA margins have stayed the same. Now, what is that telling me? Okay, this is all factual. They've stayed the same, and maybe 1 to 2 point difference, right? 31 to 33%, 31 to 28%, something along that line, very, very similar. But the reality is that shows to me that even these large companies are having a hard time keeping up with inflation. And so I'm going to give you an
Mhm.
example. I have a friend of mine that he owns a lot of Applebee's. Okay. And the cost of steak is to the client that comes in and sits down in the restaurant is $20. On the menu, it's $20. The cost of the restaurant is $10. Okay. So there's $10 difference. The thing is, though, is that if all of a sudden the government comes in and says price index, you can't move that price of the menu, $20. It stays the same. That's it. That's basically what they're doing. This is the example. You can't move that. Maybe $22, the top. But imagine the cost of the restaurant. That steak is $10. Now it goes up to 15. Their margins drastically decrease. Their expenses stay the same, if not increase, because we're seeing
Right.
also the average hourly rate going up. Which who's paying for that?
Right.
It's these small businesses. So what you're doing is you're constraining the very little capital that's already out there even more and a tighter. And so
Yeah.
it's a bad situation, and people don't understand this. It sounds just like Andrew was talking about. It sounds wonderful. This free stuff, this and this price, I can't afford this. But it's like sitting here and going, look, economically, it cannot work because now all of a sudden, yeah, the price on the menu stays the same, but guess what? You don't have much money anyways. So what's the best way to
Yeah.
think about this? Well, the best way to think about this is growing the economy. It's the same thing with business. You can't cut you can't cut expenses to success and $1 billion company. You can't. You can cut expenses and live frugal, fragile, or um, very inexpensive life. But at the end of the day, you have to work harder. You have to get into bigger
Hmm.
opportunities that produce a better outcome, right? The input to output ratio. And so, what do I mean by this? Let's just take this down simply. Donald Trump has mentioned very simply one of the biggest things, and it's a very simple economic policy. He says, "How are we going to get ourselves out of this situation?" He says, "Drill, baby, drill." That's it.
Hmm.
And why does he say that? Because we have in the US more oil than UAE. Okay. So UAE, we all know there are a lot of wealthy prince and the whole family and Prince family that are just extremely wealthy, right? They buy 10 Lamborghinis, they buy 10 Ferraris, they race camels. I mean, God forbid, they're doing all sorts of crazy stuff, right? But the thing is why? Because they have so much money because they are exporters to other countries that are buying oil from them. Now the thing is right now, if you go to the government website agency and says, look, how much are we exporting versus importing? We are importing, meaning we are buying more oil than we are actually using ourselves. So it's almost like sitting there, go to your neighbor, you have six packs of sugar, but you go to your neighbor and say, hey, can I buy some sugar from you? And you're like, why? You have 6 packs of sugar. Well, that's for whatever. Well, I can't because and it doesn't make any sense. That's the analogy I want to share
Hmm.
with you. And so that's one of the reasons why at the end of the day, we see this stuff and it just doesn't make sense. And so I want you to understand when we are start drilling oil, okay, in a safe, secure way, now all of a sudden the cost of oil goes drastically down. Now, why is that important? Because right now, oil cost we have seen it has hit. It's going from $3 from some parts of the nation to like 4, 5, $6 some parts of the nation. Well, what if we are able to drastically just decrease that? Now all of a sudden semis and the cost of semis and the cost of that drastically goes down. And that directly relates to transportation costs, which of course then when you can transport an item, food, let's say, right, for groceries, at a less expensive rate than before, now all of a sudden the price has gone down and the margins have gone up. And that extremely valuable. And a lot of times those savings, right? Because at the end of the day, companies, they don't want to keep all the profit. What do they want to do? They want to make more money. And how do they make more money? By getting people to buy more stuff. Okay.
Exactly.
So guess what they're going to do? They're going to decrease the prices to say, hey, if we decrease it by $2, now all of a sudden instead of 1 million people buying stuff, now we have 5 million people buying stuff. Well, does that make sense on a financial basis for a
Um,
business? Yes, it's incentivized, right? And the reason why I'm bringing these analogies, allowing people to understand on just a economic but very factual evidence-based kind of situation, this is it. And then the same thing with the housing market, right? We could sit there and say, hey, look, let's give people $25,000 or whatever, right? We saw this actually during the Clinton administration. They pushed out this
Hmm.
huge thing to get people to buy houses. The thing is all that criteria to say who can actually afford a house, right? It's the same thing. There has to be a criteria. That's what I worry a little bit. Is are we going to just start pushing this and getting people to buy houses? And that's cool, right? But is it going to later down in the future all of a sudden create this huge economic boom or bust that is horrible for the situation? And that is my concern. And the reason why I say that specifically is because we are seeing certain things that our Biden administration has done and is doing in the last 4 years. And Kamala Harris is part of that. Now, Kamala is running totally something different in contrast to what Biden administration stood for. Now, I understand that, but what concerns me is Kamala was the VP and is the VP of that Biden administration. So she had some say in that, and she stamps approval on that. So my thesis is we got to be very concerned on are some of those economic policies from the Biden administration that has destroyed this economy, and it's very factual to understand the economy has been destroyed. Okay, and to see how that negative effect definitely as well going into another 4 years of Kamala. And so the reason why I wanted to bring up the Trump administration side is even with the deregulation aspect, that's extremely important and valuable. We saw that at the beginning of his first term, sitting there going and say, look, we're going to deregulate. For every one regulation that we put in, we're going to get rid of two or three. And that was a huge beneficial thing for the whole industry and the economy
Yeah,
of the US. So I wanted to just share a few things on that in regards to what you mentioned, Andrew.
I think it's great. And I think another lesson of history that we can all remember is during COVID when um, people were losing their jobs, right? Because nobody knew what was going to happen. And the Fed said, okay, great, we're going to give you basically increase unemployment by 200% or 30, like, and a lot of people that were making 70,000 a year, right? They get fired from their job. Maybe they're living in a high tax state like California. All of a sudden now they're making $1,000 a week and it's not taxed at California state taxes. Now all of a sudden I'm making more money on unemployment than I was at my previous job. And so what does that do? It increases wages. And while we've already talked about how wages need to increase and the average income of individuals has not kept up with the price of housing and food, et cetera, it's that idea of if I just put more money into this thing, right? Oh, you're unemployed. Let me give you a little handout. Let me help with that. It does not. It's a short-term band-aid that leads to a larger problem, right? It's putting a band-aid on a cut instead of getting stitches. Then the cut gets infected, and now I've got a bigger problem here. And so I agree with you. I think it has to be a core issue, right? A core driver of the item where, and I think that's the difference from between Trump and Kamala. Trump has years of experience in business. I mean, decades of experience in business, and ran an incredible presidency that took this country to heights that it had never seen before. And a lot of his policies are way less fluff and much more aggressive and at that root issue, right? It's pulling the logs out of the fire to stop it, not throwing some water on it. And so that's what gets me excited about the same way that in 3.5 years we've seen our way of life kind of get destroyed in every metric. I don't think that that's on accident. I think a lot of, if you look at, I think Kamala projects as kind of some of the things that she says is at like a third or fourth grade level. But running a presidential campaign, you have to kind of speak at an eighth grade level to kind of bring the whole country in. But a lot of what she's saying in these very like simple terms are very Marxist and communist ideas. I mean, I think one of her famous lines is to be unburdened by what has been, right? That is the same. Now, and it's silly, but the root of that is extremely Marxist. It has been used in Cuba. It was used in the Bolshevik revolution where it's like the new man or throw off what has been. And so what concerns me is you run on these touchy clickbait feel good ideas, yet the root of what you're saying is all for one for all. We're all in this together. The government is going to solve everything. You have more problems, we'll fix them, sort of thing, which is terrifying to, I think, most Americans. We all know that in the last 3.5 years, the biggest issue has not been anywhere outside of this country. It has been from the top, where we're leading and what has happened to the policy decisions that have eroded the nation. I mean, the border is a great example of this, where it's like, yeah, I don't think any American would say no immigration, keep everybody out. Like everyone understands that this is a nation. It's a crock pot of nationalities, and that's what makes us great. But how do you go about that, right? Um, it's the policy moves that are it's the lipstick on a pig kind of thing, right? Isn't this a pretty pig? It's so beautiful, but at the end of the day, it's a pig, right? And so the way that things have been handled has been it's just frankly horrible, right? And so what could possibly change? Some of Trump's ideas for implementation of policies, the four main ones are more tariffs, less taxes, a weaker dollar, right? And so those are some of the items that Trump's running on that I think are very important. The last is a less independent central bank, right? Boom, that gets to the root of the issue right there. Um, I think it's one of the founding fathers. I forget who it was, but he said if the American people understood what the central bank actually did, that there would be riots tomorrow. And the root of a lot of these issues is the central bank, right? So what is Trump proposing? He's proposing way more tariffs, right? He's floated the idea of eliminating income tax, which is roughly $2 trillion a year in call it revenue for the IRS into the system. He's proposing more tariffs to basically outweigh that tax. Would that work? We'll see, right? There's currently 100% surcharge tariff on EV vehicles imported from China. One of his policies is to say, I'm going to double that to 200%. He's talking about a flat tax, a flat tariff on all imports from China. He's talking about tariffs from everybody, right? What's the purpose of this, right? Income tax wasn't around until the 1900s. The president that was president, and I forget his name, which is bad, but the transition from the 1800s to the 1900s, it's not Coolidge, but I forget who it was. But basically, he said, let's increase tariffs and push off the implementation of income tax. So income tax has not been around since the founding of this nation, right? So I think more tariffs can be seen as negative, but if you're running a business, the goal is to increase the manufacturing of our business or our country, right? So it goes back to drilling, it goes back to manufacturing. How do we get the economy humming again and employ people in these manufacturing, in plumbing, in drilling, all of these things? So more tariffs, less taxes. He's looking at it dropping the corporate tax rate. He dropped it in his previous administration from 35% down to 21%. He's proposing dropping it down to 12%. A weaker dollar, which for a long time people saw a strong dollar as positive because Americans are able to go overseas and the dollar goes longer and you can buy stuff from importers. But if you want to have a net exporting nation, now will we outproduce or out export China or some of these other nations? No, that's not the point. The point is to have American goods that are American made sold internationally. Well, right now, if you live in, Austria, right, or Germany, and you want to buy U.S. goods, the cost of those goods because of the currency exchange is much higher than it could be or was in the past. And so one of his policies is to have a weaker dollar to increase the exportations of the U.S., right? And then the fourth would be a less disconnected, independent central bank, which I think is the root of a lot of these problems. Is that I think if you ask 100 people on the street, is the Federal Reserve a branch or an arm of the U.S. government? 94 would say, well, yeah, duh. When in fact, it is not. It is a completely separate body. It is, and so like a lot of the root here is printing money to buy bonds. Like the whole system is propped up on this kind of, musical chairs sort of economy where we're just printing, and we're borrowing money to buy our bonds and like all of this stuff that is at its root inflationary. Now, inflation isn't bad. You want inflation at, a moderate level, but all the policies that have happened, and this goes back into the Trump administration where high spending outweighs like if a business was spending more money than they were making and we were out, doing diligence to allocate to this company, and it's like, oh, well, we're spending all of this money and we're borrowing all this money and we're totally upside down on our balance sheet. Nobody would invest in that company. And yet, they're AAA rated for bonds. And so there's a core breakdown, which is why you see a lot of the world kind of going, okay, I'm not going to play in that mess. Like, let's sell oil in other currencies as well as the dollar. Let's kind of create a different central bank for the BRIC nations. And all of these things is rooted in the problems that exist with the Federal Reserve. So what does a less independent Federal Reserve look like? We'll see. He's proposed changing the Fed chair, Jerome Powell, which was an appointee from the Trump administration. They had a lot of they butted heads quite a bit because Trump wanted them to lower interest rates while he was in office. They refused, and so a less independent central bank is something that he's proposed. I want to take an aside and talk about, because I think a lot of people, maybe not sophisticated investors, but I think a lot of the average American would say the Federal Reserve controls interest rates. And that is just factually untrue, right? The bond market, which is trillions of dollars, very, very deep and liquid, trades every day, is what controls interest rates. I like to explain it in a way of you have a couple that's dancing. You have a man and a woman. You have a leader and a follower. The Federal Reserve is the follower in that kind of waltz of a dance, right? The bond market trades every day. Prices, yields and rates go up and down. And then 8 times a year, the Fed comes in and goes, do we want to adjust as well, right? But more than 8 times a year do interest rates change. It's daily, right? And so how does this work? The Fed comes out and says, hey, we're going to sell bonds. We're going to have a bond auction of a 2-year note or a 5-year note or 10-year, what have you. They go to the market. They have an auction with all of the big banks. They come in the room, and you can think of this as a car auction or a fine art collection auction. And the Fed says, okay, hey, we're going to sell a tranche of 2-year bonds, and here's the price. Do we have any buyers? And by price, I mean, here's the yield that we will assign to these bonds. Do we have any buyers? And nobody's hands go up. And so they go, okay, well, how about, a little bit higher of a yield? Nobody's hands go up. They go up a little bit higher, and then everybody starts buying, right? That is how interest rates in the bond market functions on a daily and monthly basis. After those auctions, now that paper is trading on the open market, right? So on a very regular basis, there are new bond issuance at the price in which the market determines it. And so this idea that the Federal Reserve controls interest rates is just not true, right? They can tweak them, but a lot of times, like we saw many years ago, where in the last 2 years, Jerome Powell's like, are we going to raise interest rates? Are we going to lower them? And it comes time and it's like, it gets all of the press coverage and Jerome Powell says he's going to leave rates unchanged. Oh, they didn't change it. It's like, okay, well, ask yourself, have rates gone up since the last Fed meeting? Yeah. So have rates changed? Yeah, they have, right? And so what happens is the bond market determines risk, just like any other market. If I want to buy Apple stock and nobody's buying at 215 and it drops to 205 and everybody starts buying, that's the new price. The same thing happens with rates. If the Federal Reserve meeting is in 8 weeks, but we have a new bond issuance and nobody's buying at 2% yield or 2.5% yield, but everybody starts buying at 2.8 or 3%. That's what it gets sold for. That's the new rate of interest rate. So I think that's something that people would need to be educated on, is the role that the Federal Reserve plays in all of this. It is not the train conductor determining the speed that the train goes. The bond market, which is trillions of dollars deep and trades on a daily basis, has multiple auctions a year for all different types of paper. That is what really is the leader in the dance when it comes to interest rates in the bond market. So the Fed can tweak them by a little bit, and yeah, okay, they can jump it up by 25 basis points. But if you're Jerome Powell and you're like, hey, we really need to raise rates by 25 basis points, and the meeting's in 8 weeks, you think you don't call a couple buddies and go, you know, like politically, you're the one that's on stage being able to say, I'm leaving rates unchanged. Everybody goes, oh, thank goodness, right? But have rates stayed the same in the last 8 weeks? No. And so I think that's a core misunderstanding that people have. The average American does not, I mean, the average American, I think, thinks that the Federal Reserve is a branch of the US government. And even less of them don't think or don't comprehend that the Federal Reserve is not the one that is purely changing rates. They tweak rates. They're the second or the follower in the dance, but they are not. They don't have their hand on the trigger.
Such very solid points, honestly, and I appreciate you actually bringing that up because that is that's a misconception that a lot of people have, and definitely in this industry. I want to loop back on something you said specifically regarding Donald Trump's, because I love to kind of go look at, okay, what did he do in this first term versus what did Biden do in his first time, in his term? Because we can allocate and assume that very similar approach with Biden was also Kamala. And I think, David Sachs explained this almost because in an elegant way in there, specifically coming back to Biden and Kamala, Biden is always assessed as he was the centralist and Kamala was more the left-leaning individual. And so we assume, just from that economic policy, we see what Biden presented in his last 4 years, we can assume that Kamala economics will be a little bit more left-leaning. Now, the reason why I'm bringing this up is because there are two things that Trump did a lot in his first 4 years, but specifically opportunity zone and QBI, qualified business income. And why that's important is because I want to share with you real quick on this. So QBI was in the Tax Cuts and Jobs Act signed by former President Donald Trump in 2017. The tax breaks allow owners of pass-through businesses like sole proprietors, partnerships, S corps, and most of our audience to deduct up to 20% of their business income from taxes. Now, why is that extremely important? And the reason why is because owners claimed about 150 billion in total deductions for tax year 2019, up from 146 billion the year prior. Now, why is that important? Because now what basically has happened, and again, it's come this old adage of, hey, look, the more money I have, the more money I will be able to spend, right? It just comes down to it. And so now, will some of it go to vacations and whatever? Yes, but why is that important? It boosts the economy. There's money into that. Will I invest some of it back into my own business, et cetera? Yes, 100%. But when you give people more money, now all of a sudden you have more people that have more money and so forth. And I also looked at it just to give it coming down to a beautiful example. So I had a friend of mine, okay, that runs a really incredible construction business, okay, and because of this QBI, qualified business income, he actually said, look, I was able to hire like 5 new people, new construction workers. I was able to buy, definitely with the loans were so extremely low as well. This was in addition to it. I was able to buy like 3 other trucks and then a ton of other equipment as well. To now all of a sudden he had access to all that equipment instead of having to have that as an expense. Now, why was that important? Because what did he do? He just hired 5 new people that are now paying taxes. Then you multiply that by 100 or 1,000 or 10,000 other businesses that are doing the exact same thing. What just happened, right? Now all of a sudden the pool of money has just gone even bigger, and now the government is getting a percentage, smaller percentage, but a smaller percentage of a many people than just getting, say,
Hmm.
take a lot out of a little people. And that's what it really comes down to. And again, no matter what, we still have to pay taxes, but I'd rather, hey, look, we all pay taxes and we all pay a small percentage, right? But now all of a sudden it's like lifting up a stone, right? A huge, huge boulder. If one person does it, it's going to take a lot of your energy and effort. But if you have 100 people doing it, all of a sudden it's the same structure. All that weight is distributed evenly according to everybody's energy and so forth. It's the same thing with like
Totally agree.
funerals. Funerals with like caskets. Again, the same analogy, right? Guess what? If you have one guy trying to carry that casket, the dead body's going to fall out. So don't do it. But if you have six or seven, eight guys, what happens? It becomes lighter. It's easier. It's the same
Yeah.
attitude, same concept. And again, I like to bring these analogies because it just simplifies and people understand this. So that's one thing with QBI. Opportunity zones. Opportunity zones. It was actually from Tim Scott, which is a senator from South Carolina, and we're
Yep.
investors, so we have seen this on the forefront. What happened? The opportunity zone was basically saying, okay, there are certain areas, inner city, more specific states, wherever that money needs to flow. And so what did they do?
Yeah.
Opportunity zone said, hey, look, when you as an investor, you deploy capital in these kind of cities, these kind of regions, these kind of states, you get a tax incentive. So guess what happens? Well, now what are you doing? You're incentivizing behavior to deploy capital in a specific region that the government has defined as an opportunity zone. Now, why is that important? Because me as an investor, hey, guess what? I get a good tax advantage. So of course I'm going to do it because I got other assets over here that are going to be rocking and rolling. And again, a lot of Pax Fortis, a lot of what we do, we've seen that. But also, why is that important? Because we also started seeing all these states that weren't getting a lot of capital now got a huge influx of capital, of outside capital. And again, I think that's extremely important because instead of, and again, coming back to this concept of, hey, look, when there is a house is on the fire, you don't take a little cup of water and pour it on there. You say, okay, look, what are the big strings? What are the high leverage activities that will actually move the needle forward in the economic machine? And obviously, we're
Yeah.
and again, this is just factual evidence. It's not sitting there, political. It's saying, look, hey, these are actual numbers. This is actually what we have seen. These are real situations that have happened. And right now, with the Biden economy, there's numerous friends of mine that have said, look, I had to fire a few people. And one of the reasons why they've a lot of my friends have embraced AI is because they could. One of the biggest expenses is capital,
Sure.
human capital. Human capital is one of the biggest expenses. And so, look, they came in and embraced AI tremendously because now all of a sudden they could operational and systemize a lot of things through artificial intelligence, and then also do a lot of things that other people were doing with HR or finance or anything like that. And so I think it's extremely important to understand that at the end of the day, these businesses, they're looking to decrease their expense. And if taxes and all of a sudden taxes and life and expenses get even more, guess what? The only way they can do that is say, look, now all of a sudden you have to fire three or four people, let go people. What happens in that situation? Now there's three or four people that aren't paying taxes, that aren't now all of a
Yeah.
sudden the pool gets smaller. And so I think it's extremely important to acknowledge that, but just get it into a smaller, bite-sized analogy so people get it at a local level and why that's important. But Andrew, it's been a
I
great conversation, and I think it's incredible to see the dichotomy that's going on right now in the economic policies. And yeah, I mean there are certain things where it's like no taps, no tax on tips and stuff like that, and little political little whatever sayings. But at the end of the day, you always want to come back down to the principles and the policies and the execution. Say, okay, well, what did they say, and versus what did they do, and what are they
Yeah.
saying versus what are they doing? And I think that's extremely important.
100%. To summarize it, I think we have two different views. One is the empowerment of the individual, and one is the empowerment of the state. And I think that's the core of a lot of this. And you can summarize a lot of these policies towards the differences between those two. Um, I'm of the empowerment of the individual, a small government. Let us let us do our own thing. The more money that we make, the better the economy is. I think everybody understands that. Yet when it comes down to this social and woke culture of I don't want to offend anyone and this and that, it becomes this underlying thesis that it's about the empowerment of the whole and the empowerment of the state versus the empowerment of the individual. The individual becomes lost. And that's what I think we're on the precipice of. I think if another 4 years towards this Marxist, communist kind of ideals, that it's going to be, I mean, it's already going to be tough to come back from what's happened in the last 3.5 years. And I think what's surprising is how fast the pendulum can swing. Frankly, when Biden got in the office, I'm like, you know, we'll see what happens, right? And sitting 3.5 years later, I think most Americans are shocked at the difference of the money in their pocket, the state of the economy, the cost of goods. I mean, it has been a dramatic shift in 3 years. So it comes down to how long can we sustain this before all power and all of our saving solutions are the state versus the empowerment of the individual. And I think that's what's underlyingly happening here is a shift towards reliance on the state. That's a very subservient individual and subservient population. There's no uprisings because gosh, what the heck would I do without the wonderful US government? And that's what concerns me is the reliance on the state and the growing of the state versus the empowerment and growth of the individual.
100%. And I would highly recommend people to go read Atlas Shrugged by Ayn Rand and see the similarities that are going on. It's very, very interesting to see. Anyways, Andrew, always a pleasure. Guys, I hope you guys enjoyed it. And next week, we're going to be talking about some really, really crazy stuff. So make sure you tune in. But until next time, guys, have a good one. Appreciate it.
Bye bye. Thank you.